What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you hit that subscribe button if you're new here and the notification bell to be notified whenever there's a new breaking video all about the hottest new information, analysis, macro psychology, financial revolution, domination, everything. Thanks for coming today, guys. We got some interesting news about our good friend Bitcoin. We're going to talk a little bit about Litecoin as it relates to price. And then I want to talk a little bit about some other interesting kind of like funny macro trends. And then I want to talk about some really big, more on the tech side. I guess you could call it fundamentals, but just some things I've been thinking about as it relates to the future of where we're going. And I thought that these might just be some cool ideas or stuff that I've been thinking about, because that's what I do. I watch geeky, nerdy videos, and I love it. So hopefully this will help you guys make better decisions and get a sense of what's coming or what you think may be coming for the future. Now, let's look at Bitcoin. Yesterday, we were talking about how we're going to see a retreat in price and how this line, right around 8,800, represents, this is where I am looking. Okay, so the 50% retracement, give or take, around 88.45. There's a clear issue with the chart right here, which is at the same exact point. Previous resistance levels across the board. So you're going to see some major support there. So from a pure retracement standpoint, from a support and resistance standpoint, that looks awesome in my opinion. Now, at the same time, we bounced right off of the 9,500 level, at least on Coinbase, GDAX, all that good stuff. So you could see how this, didn't quite get down there. I have a feeling some people put in some buy orders above the line. That's typically what happens when you get these wicks that shoot down and then you get a reversal. So you get a hammer, doji, anything like that. It's clearing out the stop losses. So I think some people front ran, is that a word? The exact level, right? And you see that from time to time. And then recently, as of a couple hours ago this morning, same exact thing happened. I mean, look, it's just like to the dollar here. It just bounced off the 10,381 and it's on a bit of a retracement. And so whatever happens within this zone, we will see. One option is that it retests it, and if it does and it breaks through, that's a good sign. I mean, that may plant us in this top retracement zone before it goes to a new short-term high, which would be above 11,000, let's call it 11.8, give or take. And then we can move up to the next real big ones, which are, talk about like probably 14,000, a little under 14,000. That's when it starts to go full out bull run, at least in my opinion. Meaning, there's just not a whole lot to do here. Unfortunately, I mean, that's for me, a daily disclaimer, not a professional, this is not financial advice. You always got to say that. But I'm still going to wait for this thing. The way that this is set up, the way that these resistance levels, the way that this chart is set up, I'm still going to wait for this retracement. If it does not come, I am not going to lose a minute of sleep over it, because that means we're back into a new phase of potentially moving up, and I will adjust my targets accordingly. But that was my plan. I'm sticking to it, for better, for worse. And we'll see what happens over the weekend. We'll keep an eye on this. So staying there. I don't think we're quite out of the woods yet. I really, really want to see some major support here. I mean, I would love to see just all-time volume on a 50% retracement and see this thing just blast off. Whether or not that's going to happen, I don't know, but I'm not convinced on this 9,600 short-term low. I'm not convinced that was powerful enough to be the true low. Flipping over to Litecoin, my other favorite, kind of see the same thing here. Go over to the 4-hour just to give a little bit of a better chart. And we've been watching this level, as you can see by this line, right around 160 for a while. That is a 61 retracement level. And luckily, on the USD chart at least, this got cleared out, this first chart imperfection from, let's say, 100 to call it 130. I mean, there's a few overlaps in here, but that got cleared out by this area, this big dump. And then now we've got this new chart area here, meaning it tees up pretty perfectly with this, call it the 61 retracement. Let's say that's 168 on Coinbase. Right? This is always going to change a little bit. If you look at the Litecoin Bitcoin or LTC against Bitcoin, you can see a similar pattern in the chart. And the difference being that it's just a little bit more of a localized. So this price is getting worked out. This is a little different because it was already coming off of a low. So it's a little bit of a less of an issue over here. But I would like to see it either go down even a little bit more against Bitcoin, maybe even fill in this gap or not. But if it does, this accumulation phase, you better watch out when that thing, when we start rocking the major bull run. So overall, from a USD standpoint, though, I think the 150 area is probably going to be what I've got my eye, or I'm sorry, 165 area is what I got my eye on. With a couple stop losses below that, just in case anything goes terribly wrong. But yeah, I'm being patient here. I'm not. You never want to underestimate. It's a lot better to miss a buy than it is to buy too early. So, as I've learned over the course of the last few years of this stuff, flipping over to crypto or current CoinMarketCap.com. By the way, have you guys seen how much traffic this site is getting? It's something like, I mean, it's hundreds of millions of visitors. That's unbelievable to me. Just as somebody who's been in the marketing business for years and years, who's seen traffic, that's crazy. These guys are making bank. So, hats off to these guys for doing so. Now, I always like to flip it over to Bitcoin. And I think there's as we saw, the ones that drop the most, are the ones that gain the most against Bitcoin. So imagine it's kind of a multiplier effect on altcoins. Many of you who have been around know this already, but if you're new to crypto, that's really what you see. And it's also why people can start over trading. They can start to move their money around a little too quickly, trying to hopefully chase those gains. Ethereum Classic has a fork coming up. I don't think it's for like another couple weeks, but that's one of the reasons why you may start to see this, among other things. The other thing is Nano, which previously called Ryblox, which I want to talk about in a second, had a really big run kind of out of the blue, but I don't know if it was necessarily out of the blue. And everything else really just kind of mirrors the coins that seemingly have been hit the most. Now, here's the big question before we get into the next piece, or here's the big thing to think about. In moments of like this, when there's bearish sentiment and then it switches over to bullish sentiment, which is what's happening on these kind of, short-term reversal patterns that we're seeing. And we saw it to a certain extent over the last few weeks, as this has, we've gone through basically 100% bull run, a micro bull run, I should say, is that altcoins look like if everything is going up, altcoins are going to go up forever too, in Bitcoin terms, right? That's how I look at it. That's how I think most people should look at it. You got to beat Bitcoin. Otherwise, you just might as well hold it. But what happens, and what could easily happen, is that let's zoom out here for a second on the Bitcoin chart, is that let's say this thing goes down or does its thing, or even right now just blasts through and we go on a new bull run. And let's say this new bull run is absolutely crazy. Let's say it goes up to like $35,000. Just crushes all-time highs, totally takes out some of the previous records, and we're in a whole new parabolic phase. Very quickly, these altcoins, instead of short-term beating Bitcoin in SAT terms, which is how you measure it, they will quickly start to get crushed by Bitcoin, because Bitcoin will start to become the juggernaut. This is exactly what happened last year after the big altcoin run. So we just had a huge altcoin run in December. Now we're down in the big doldrums. We're seeing all this dopamine, all these people, right? Everybody that I've talked to, at least, chat rooms, Twitter, everything. As soon as there is the semblance of hope, money's going into altcoins in order to get the big returns. But when you look at the big picture, when you look at the way that this market has performed in the past and the way it probably will perform again, at some point, if Bitcoin or Ethereum goes on a mega bull run, this trend of altcoins outperforming Bitcoin is not necessarily going to hold true. It may for a little while, but if there's a lot of juice behind Bitcoin, that's really important. And the reason why this is a huge piece is because it's very tempting to go all in on altcoins on these dips and not keep any of the top coins available to buy later on, because you think that altcoins are going to outperform Bitcoin the same way it's happening in reversal moments. That's not the case. If Bitcoin or Ethereum just starts going nuts and crushes everything, you are going to see a lot of these SAT prices get massively depressed. And then owning Bitcoin is a huge premium, the same exact way it was in like September, October, November. So what I'm doing, at least, this takes discipline, especially when you see where the returns are coming in right now, is you got to make sure you keep, obviously you got to have fiat for dry powder just for a variety of reasons, but also keeping Bitcoin and or Ethereum that is used as risk capital, as well as having your altcoin portfolios. Do not spend all of your Bitcoin or your Ethereum. Now, I'm not saying like this isn't advice. I'm just saying it out loud because this is like my thought process. Because you gotta hedge for the idea that Bitcoin or Ethereum could blast off, and that's not a crazy scenario. In fact, that's a very plausible scenario, and you want to make sure you're not totally into the altcoins that are getting worked. All right. Now, Nano. This is by no means an endorsement of Nano. Let's see. In fact, I sold most of my Nano, which was Ryblox, when it was on its big bull run, $25 or whatever it was. So I'm not that invested personally at this point. But one thing that's really interesting, let's look at I think it's about the 1 month, is that, as you may know, Ryblox, let's call it Nano now. Nano got their major exchange called BitGrail. It had a lot of withdrawal issues, and then it got hacked by an insider who basically exit scammed. And the whole thing was a disaster. A lot of people lost a lot of money. It was BS. I mean, it's infuriating, right? And so when that happened, Nano had a pretty severe immediate drop. And this also coincided right when it got listed on Binance. So there's a whole ton of liquidity. It's like this whole perfect storm. And as this happened, I looked at the past, and almost every time an exchange has been hacked or a currency has been compromised or something has affected any particular large currency that didn't kill the whole thing. It was like the whole currency didn't exit scam. It was just that there was a big problem with it. There's always a severe sell-off, but almost across the board, it comes back eventually. And the same thing happened with Nano. There was a big sell-off. This was people dumping their bags because they're on Binance, and it was like a whole new liquidity area. And it was just this capitulation phase that starting this week, it hit the bottom. Now, I don't know if you ran the retracement on this, if it would work out exactly. If I was a betting man, I bet it probably hit a pretty good level. That was right on par. But now it's coming right back up to the exact same price, right around where it was before the hack happened. Meaning, this is by no means is this a guarantee. In fact, it's pretty risky. But as you hear about big coins or big exchanges or something, big hacks happening to like a top 100 coin, and you see it's very emotionally driven and kind of like headline news, there's going to be a huge drop. And often history has shown us that drop will come back in price. And it's not going to be immediate. You still got to, watch the price itself, and you got to do your own analysis. But it's a factor that many people forget about, because in the short term it feels like it's done, but in fact it comes back. So something to keep in mind as you see these kind of how the macro can actually make you money if you're being smart about it. Now let's flip over to our good friends over at Bank of America, BOA. Well, the Bank of America, as do all publicly traded companies, they have to fill out what's called a 10K, a Form 10K. If you don't know what that is, it's essentially a public record that is filed for publicly traded companies that shows here's the state of the union. It gets filed with the SEC, yada, yada. You can go look it up. And typically they're pretty boring and long and very, very monotonous to read. You know, there's sometimes they're actually pretty interesting, especially for new companies, IPOs and things, because you can find out a lot about the company in their 10K. But there was one thing that I saw. I shouldn't say it. There was an article written about this, I think, on Cointelegraph. But it's always better to go to the primary source, as we know. If you scroll down to under risks. So this is not only a letter to the SEC. This is something for the investors. This is not a prospectus, but an update where it shows everybody, hey, here's how much money we made. Here's our business plan. Here's what we're doing. Here's what the risks we face. It's everything. It's just an update, investor report, whatever you want to call it. They specifically call out cryptocurrencies, but it's really interesting to read through the language that they use. I'm not going to sit here and read it all to you, but I do want you guys to go check this out. The first is how competitive, how much competitive juice they are feeling from crypto. And that comes from not only from the tech, but from a consumer standpoint. So they're saying things like financial solutions, including electronic securities trading, marketplace lending, and payment processing. Further, clients may choose to conduct business with other market participants and engage in business that offer products we deem speculative cryptocurrencies. Meaning, if Robinhood, that's a trading platform, but let's say trying to think of a bank. Let's say Joe's Bank, or Joe's National Bank, or whatever. Let's say they're totally cool with crypto. You depositing crypto, using a credit card with crypto, working with Gemini or Coinbase. You may go work with Joe's Bank. That's a huge competitive threat to Bank of America, because you're going to make that decision because Bank of America is saying, well, no, crypto's too risky. You can't work. We're not going to allow you. People will go work with this. And I think they're putting this in their 10K. This is a real thing. They're actually going to feel it on their bottom line. But similar, and they go on to say increased competition may negatively affect our earnings and create pressure to lower prices or credit standards, blah, blah, blah. When you look at that, and you also look at how the competition in terms of the way that they're being outcompeted, is that their products are also not keeping up. So they may need to adopt better, faster, new products that have just better solutions. I don't know about Bank of America, but any bank, online banking is not that sweet, right? I mean, the whole process of banking is not that sweet, to be perfectly honest. But they are feeling the pain because people are starting to be like, why is this so difficult? Why is this so complicated? Why do I have to go to a teller? Why do I have to pay all these ridiculous fees? Why do I have to wait the weekend to wire money? Everything else. Similarly speaking, over on the next one, our inability to adapt our products and services to evolving industry standards and consumer preferences could harm our business. So they go into, they basically say point blank that if they cannot address many of these issues, that they're going to not be able to charge fees. They're not going to be able to do a lot of the bread and butter parts of their business that are bringing in the profits. And, you can go through the whole 10K and look at their balance sheet and their P&L and where they're coming from money. It's not even the full picture because you don't really know exactly where it's coming from. But it's an incredible amount of money, how much they're ripping people off basically with fees and transaction costs and ATM withdrawal fee, like everything. And they're blatantly saying that crypto is not allowing us to make money the way that we traditionally make money. And that's a big threat to our business. So you can take this a few ways. One, you can say like, yeah, screw the banks. And that's fine, but that's an emotional response. The way you want to think about this is how we talked about this yesterday. Put yourself in the position, sit in that boardroom with the VPs of whatever, maybe even the CEOs, but at first they're going to be pissed about this, but then they're going to realize that if they don't do something about this, they're going to start losing money. And that's the ultimate pain point for a publicly traded bank. How are they going to adapt? Well, they're going to probably have to compete with services. They're going to have to incorporate either the ability to buy crypto or even incorporate the blockchain technology themselves. They're going to have to integrate more efficiently. But the only way that that becomes a reality is if the demand continues. If people like me and you continue to be a part of crypto, to be responsible with crypto, to evangelize it, to believe in it, to work with developers, to create great products, to market it, whatever, because we have to keep this demand up. We have to keep the pressure on for this change to happen. And more importantly, they're going to quickly start to look at solutions for this that may be coins that are in CoinMarketCap. Right? They may start to just say, hey, look, Ethereum offers some really good technology, or I don't know, the Stratus or Dogecoin. I mean, any of these, right? They will look for some new solutions that are faster, cheaper, that can help them stay competitive, because new banks will come up that will be competitive, that are using technology. So it's very, very interesting. I would encourage you guys to read this and also take it a step further beyond just the how does this feed our own emotional distaste, potentially, I would say most people, for the banking industry as a whole. Take it a step further. What are they going to do about it? And how can we capitalize on it? How can we keep the pressure on, and how can we capitalize on that? It's like we talked about yesterday. It's not about dethroning them as much as it is like getting inside. We gotta get in there and go from the inside out and ride the wave as we do it. And that's really how you create this sort of innovative change. So I thought this was really interesting kind of insight, right? And you can look at the rest of the 10K. It's pretty straightforward. A couple other things. I would say the last piece is all about the future, right? So yesterday we talked about investment ideas, which I think are really going to be about not even companies, but established businesses that start incorporating blockchain, start incorporating this crypto in a way that makes them more profitable, more innovative, cuts costs, increase transaction times. Things like Oracle's are really, really interesting in that way. Anything with banking, I think, is really interesting, settlement layers. But the other big question, so that's like the use cases, but the other big question is much more on the tech fundamental macro side, not even macro, like tech big picture side, which is when it comes down to, well, what's gonna win? And I don't think there's going to be one or two winners. I think there's going to be different winners for different industries. The same way that not all websites are developed in the same coding language. Like that's one kind of loose example, like that different technologies are going to serve different needs. But they all are going to have the same issues that they need to solve in different ways. One of which is governance. And if you've never seen a lot about Vitalik Buterin, one of the founders of Ethereum, I would encourage you to watch it. I'll link to this interview. I thought this was a really good interview. Super smart guy. And also just a great interviewer, the interviewer on the show. So go check this out. But governance is going to be a very big deal, because as they switch over to Casper, which is a proof of stake system instead of mining, there's a lot of governance and security implications about, hey, if you own 25% of Ethereum tokens, how do you protect that? Like, how do you get that person not to be able to how do you keep the integrity of the whole network established? And these are really important questions that come from trying to solve the biggest debate in crypto, which is how do you get the fastest possible blockchain or fastest possible decentralized, not ledger all the time, but decentralized network, and how do you have the one that's the most secure, right? And the governance kind of falls in the middle. But watching this video really helped identify what that conversation looks like for somebody like Vitalik, this is all he thinks about is the architecture of these networks. I mean, who better to hear from than someone like that? Similarly, this is a great blog post that Kyle Samani put out. He works at Multicoin Capital with a couple other guys, and he goes through the scaling side of this network debate. Right? So it's a little bit about governance, but it's really about how does this scale? And the conclusion is that there's going to be a lot of different things scaling for the next year, 2, 3 years, but there's also going to be a lot of companies that try to connect these chains along the way. And how it all unfolds, we don't know. Will it be one network that scales really, really well? Will it be a few networks that kind of scale, but the actual scaling comes from off-chain that connects them together? We don't really know yet, but this is the kind of stuff that is going, this is the forefront of crypto. This is what's really important as you are looking through your decisions, because like I can't stress enough how important it is to start thinking about the long term of where this is all going in order to make the really big money. And I keep coming back to the same idea of, like, if you are on the newsletter list, and I would encourage you, go to coinmastery.com/invest, get on the newsletter list. And on the second email or whatever, there's a story about how I bought Apple at like $7 or $8 or something back in 2003 when I was a freshman in college. And it's so easy to look back on these stories and say, man, if I just held on to those stocks, I would have so much money now. And similarly with Amazon, in 2001, it was trading at, I think, $7 or $8. And after the big crash, now it's at 1,500. And everybody's got a story, something like this. Oh man, I bought my first Bitcoin in 2011, but I sold it all. And everyone's got something. But the real question is, even if you knew how big it was going to get, could you hold it for 15 years? With Amazon, for example, if you knew 2001 it was going up, call it 300x, or whatever, could you wait 15 years or 17 years for that sort of realized gain, knowing that it was only going up a little bit at a time all the way, but it was just going to keep going up? Could you continue to hold it? Would you get sucked into new opportunities? Would you hold it through the financial crisis? Like, could you still hold on? Now, obviously, the certainty changes a little bit, but I think that's the way you got to start looking at some of these coins. And the valuations are very different. The market caps of all these are complete. It's just like, I mean, without the liquidity, this is all just whatever. It's just made up, in my opinion. But the timeline is not. And the fact that down the road, some of these are just going to be monsters. That may come through in price, but at the very least, it'll be a significant increase in price. But you got to think about that. So, for example, here's an exercise. If I told you that Ethereum was going to be worth $80,000 in 10 years, but I didn't tell you how it was going to get there. I didn't say I was going to get there in the first year or the last year or how I was going to get there. And you would probably say, oh my God, I would go buy as much Ethereum as I possibly could. But could you hold it for 10 years if you didn't know how it was going to go down? That's the big question, right? That's the thing. Like, as retail investors, we look at the short term. We look at making profits. We look at taking profits. We look at these 20% swings here and there. We look at what's going to happen today, tomorrow, this next week, so we can make money. But when you talk to the guys who are moving major money, the fund managers, the people that are interfacing with the big money, that's what they're thinking about, is how can we invest in stuff that has a real time horizon that's going to be around in 10 years and it's going to be huge, that we can make massive returns on, but that will follow that through. That's why they don't really get hung up on the day-to-day price. They don't really, because right now they look at the big picture. They look at the regulatory stuff. They look at how this is unfolding. Yeah, they look at the tech, obviously. They look at how this is playing out. But I would encourage everybody to start thinking like that too. And the reason why is because that's how you get the Amazons. That's how you get the Apples. That's how you get the Googles. It's not by getting the right pick and buying it and seeing it go up 1,000% in a week. It's by buying it and being able to hold it for 10 years and getting 1,000x. That's the difference. That's like real wealth. And it's hard. It takes discipline. And nobody knows which of these are going to win the biggest. Nobody does. But these kind of videos, these kind of blog posts, they're complicated. They can make your head hurt. But these are the things that not only will help you gain insights, but it's going to get you to hold on. Because if you're waiting for someone like me or somebody else on YouTube or on Twitter to watch all this, to read all this, to give you the Cliff's Notes version, and then say, hey, look, I think Ripple is going to be the biggest thing ever. I don't think that. But, if that's what I said and it didn't do anything for 2 years, you'd be like, damn, that guy was full of BS. What, Coin Mastery, what a joke. I bought all that Ripple. But if you go and you learn and you read this stuff, it's more effort, but it hardens your holding power. It makes you a better investor. It changes the way your psychology, it changes the way that you are affected by price. And when you look at the big winners, that's going to be a big deal. You don't have to do it with all your money. Obviously, you don't have to do it with any of your money if you want to, but this is how I look at this many times. So I split it short term, long term, and trying to play both of those as best I can. Okay? Great times. We're going to keep an eye on this fun little Bitcoin price. All eyes on 88. See what happens this weekend. I hope you guys have a really great weekend. It's always great to be back and chat with you. And I will catch you later. All right, peace out.